Good day, this is Shauna Casey, and welcome to this SOS educational webcast, Stock Admin Prep for Year-End and some things in between. Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the questions and answers panel of your GoToWebcast console, and we will do our best to answer them as they come in. And any questions that we don't get a chance to address during the webcast, we will follow up with afterwards in an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. You can also find the link to the materials under the Event Resources tab on your GoToWebcast console. This session will also be recorded, and we will send a link to the recording and materials in the next day or two. I hope that all of you are familiar with Stock and Option Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is the only true outsourcing firm within the equity compensation marketplace. We deliver a team-based approach to filling the seat in your equity compensation department. To learn more, you can visit us online at www.sos-team.com or call us at 408-979-8700. Next, I'd like to introduce you to our speakers for today's session. We are pleased to have Chris Cox and Colin Bass, both of SOS, on the panel today. Next is our standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. As I mentioned, the materials are available on our website, and here again is the link. Thank you all for joining us today, and with that, I'll turn this presentation over to Colin, who will introduce our topic and cover the agenda. Thank you.
So today we're going to cover a few items. The first thing we're going to go into is options. Then we're going to go into awards, transfer agents, and how to interact. We will touch on SEC reporting, so those form filings for your insiders. Then we will go into year-end and what to expect. And then we will wrap up with year-end employee forms and how to decipher those. And then at the end of this broadcast, we will have a Q&A session, so feel free at that time to shoot any questions our way, and we'll cover those at the end of the presentation. Now I'm going to go ahead and pass it over to Chris, who's going to kick off the presentation with options.
Thank you, Colin. Thank you, Shauna, and thank everybody for joining us today. I wanted to review some of the basics that could help with your year-end processes and possibly help with some of those participant questions that come in the year-end into January and February about taxes and how their awards are affected based off of those taxes. So I'd like to start out with looking at ISOs, incentivized stock options. First, we'll look at what is the ISO 100K limit rule. It's a limit that is set by the IRS 422 for the value of the shares that are vesting within a 12-month period. That's the maximum amount that is allowed to vest in that period. Everything else will carry over to a non-qual. I used to think about 100K before stock administration as, you know, a lot of money, maybe Rolls Royce or an Escalade or something like that. But now you're thinking about ISO 100K limit being that rule, or 100K IRS limit to get those taxes over to the IRS, so the company isn't penalized. So yeah, it's amazing what the stock administration field does to us with these 100K limits, and kind of change the thinking on this. So that's a question that you might be asked or you want to prepare for in year-end. And how does an early exercise affect this rule? This is more common for private companies to allow early exercises. All the public companies still do allow this. If their plan allows, private or public allows early exercise. And it is important to know how this affects the rule of 100K, because those early exercises, whether the participant is going to early exercise or not, The 100K limit is going to apply to the full value of the award on date of grant. So the full value doesn't matter if it's a 4-year vesting, vesting equally 25% over each year. That full value of that reward is going to be recognized on grant for that award, and the rest is going to be treated as a non-qualified stock option. This is important to ensure if you're a private company. I know here at SOS we had a situation where there was a young early private company, and they had an early exercise clause on their grants that they allowed, and we weren't properly splitting those up in the system. So luckily we caught that before any kind of year-end was done, so we got all that corrected in taxes. So that's just something to keep an eye on and make sure that that's being applied correctly to those early exercisable ISO grants, whether they're doing that or not. And it leads me to the next question: can an 83B election be filed on an ISO grant? Yes, it can. Early exercisable ISO, we see what that does. So yes, you can file an 83B election. That election will have to be filed within 30 days prior to the exercise date. And that exercise date, typically it'll be when some kind of approval happens. Typically the CEO will have to approve, or a comp committee will have to approve to make that early exercise paperwork effective. And that'll be used as the exercise date to calculate when this 30-day clock will start to get that early exercise, that 83B election filed into the IRS. And then we'll look at what is the difference between a qualified and disqualified disposition on ISOs. This is a question that comes up a lot with participants. Why are they seeing the W-2 at the end of the year? It's not what the amount they expected to be taxed at the end of the year, and this is something that could change that. So a qualified disposition is if you hold the shares for 2 years after the grant date and 1 year after the exercise date before you dispose of those shares. Anything that happens before that is considered a disqualifying disposition. Companies should be tracking this through reporting those disqualified dispositions or sending out surveys if you allow those ISO shares to be transferred outside of the broker. And a disqualified disposition should be reported on the W-2 as income, and then the company gets to take a tax deduction on that W-2 amount that's reported. Qualified dispositions, participants might wonder what happens since there wasn't any taxes that are collected on ISOs at the time of exercising, and some participants may see an AMT tax. We always advise to consult with your tax advisor, as that will vary depending on each person's unique tax situation. So moving on to the counterpart of ISOs, the non-qual stock options. This is a lot more common, non-qual stock options for early companies or companies who want to play it on the safer side with reporting, tracking ISO shares. It's just a little, administratively speaking, it's a little bit easier, straightforward with non-qual stock options. When an employee is taxed at a non-qual transaction, that's going to be upon exercise, unless an 83B is filed. Employees will recognize the spread on the exercise as ordinary income. That spread's going to be the difference between the strike price of what they have that non-qualified stock option at grant and the value that they sell it at on the day. If it's a private company, it's going to be that fair market value within that recent valuation period. And how does an employee calculate cost basis to avoid double taxation? A participant's cost basis is the fair market value of the stock on the day it was acquired. And again, unless that 83B election was filed on that, it'll capture it at an earlier time period. So typically brokers or if it's a private company, the system, you'll report what that exercise, the current FMV is calculated at that. And speaking of FMV or fair market value, companies will define in their plan what they're going to use as the fair market value It'll be the close of business or during that fair value valuation of a private company, or it is also common to see the high and low average price be used as the fair market value. How does the same-day sell affect capital gains? This is a question that we get here at SOS quite a bit for participants. They expected to see capital gains, or they think that the whole amount should be treated as capital gains. So same-day sell, you won't recognize any capital gains because you're actually exercising and selling at the cost basis on that day. So anything that's held over one day, if you hold those shares, then you would see capital gains. Is kind of how we like to explain it to participants. Short-term, anything less than 1 year. Long-term, anything over that. And of course, we always, as stock administrators, like to tell them to please consult their personal tax advisors. I thought that it'd be helpful to add this W-2 spreadsheet here. This is taken off the IRS website. We get questions about where to payroll, where to report the employees' earnings at on the W-2. This is a great tool to work with payroll with on making their job a little bit easier on reporting for those taxes that are withheld. Also, if payroll, it's pretty common that payrolls aren't used to reporting ISO dispositions, either because they're fairly new to the company, to the plan, or that person at that payroll person wasn't used to handling that because they weren't offered at whatever company they were at. So we get the question a lot of where they should report those dispositions at as well, which those should be reported in box 1 and box 5 since nothing was withheld, and then box 2 if the cap hasn't been met for those guys. So this is a great tool to kind of just go back to payroll, or even explain to participants that, hey, this is where we're reporting your ISO dispositions at. This is why you're seeing a little bit more, a little less tax refund in some cases, or paying a little more taxes at the end of the year because you created that disposition. We had to report that here based off of those ISO rules from the IRS. I'm going to move on to awards now. I wanted to start out with the restricted stock unit, also known as the RSU. What is the RSU? Usually it is a full value award, and it's typically granted at no cost to the participant. Although smaller companies, emerging growth companies, or companies that just need more cash flow can charge a price for these, a priced RSU, and anywhere from 20% all the way up to 100% of the value that they want to charge for those RSUs at grant. It's typically a safer route than granting a non-qual stock option, but it kind of, in a sense, effectively is a discounted stock, except you don't have to worry about those scary 409A deferred tax asset penalties that you might run into with granting options at discounts. So it's a little bit better way to work around that. So that's just another way to look at these restricted stock units as well. Who can receive the RSUs that the plan allows? Anyone could be granted these, employees, non-employees, directors. It's a good thing about the vehicle. There's no IRS rule or any kind of law that states that you can't grant whoever these awards. What type of taxes are applied on release date? This is a big question here, and this varies. Not what taxes should be collected, but how you're going to collect that tax varies, and participants like to understand their options of how they can collect those taxes. Companies are required to withhold your federal, your Medicare, your Social Security, and any kind of state or local taxes, any kind of insurance tax, anything like that on a local level. And non-employees are typically not going to have taxes withheld. by the company, and that income is usually reported on their 1099, and they handle that on their own, either through their quarterly or yearly, however they handle those tax payments. And this tax calculation is going to be similar to that non-qual. It's going to be the spread. It's going to be taxed at ordinary income. And the strike price is usually $0 with these. But if you did charge a price with these guys, then of course that would be the new strike price, and then that difference would be the ordinary income that would be taxed at. A few different methods can be withheld or used to withhold from taxes. This is most of the time this is laid out in the plan. You got net settlement, sell to cover, sell all, just to name a couple of them. And some plans are going to pick for you, and some plans allow the participant to elect. And we get participant questions on what their options are. Some like to hold their shares for capital gain reasons or personal tax reasons. It's a very common question that we get, and luckily this is one of the things that a lot of plans write out in broad language of what's allowed and what's not allowed on how we're going to collect those taxes for those RSUs that are released. Can you file an 83B election for RSUs? No, you cannot. You can't file one on RSU grants. When can an employee begin to collect dividends on long shares? So if the company pays dividend equivalents, or allows dividend equivalents, then most companies will pay those in either cash to the participant when those shares vest, or they'll put that amount towards the participant's tax withholdings when they vest. So that's usually how those dividends are handled if they do pay dividends. Those are the common ones that we here at SOS see when dividend equivalents are involved. Restricted stock awards, or RSAs, kind of the other side of RSUs, so to speak. They're kind of similar to RSUs, but they can be granted at no cost. But these guys are issued at grant, and then they're placed in escrow until the vesting conditions are met. The participant will also have voting rights on these shares, and then they'll also receive dividends if there's any dividends paid out on these shares. The RSAs, they could dilute EPS, and as they're issued and outstanding in the participant's name. But a benefit of being issued and outstanding is that 83B elections are allowed on RSAs. The tax deferral method, however, cannot be utilized on RSAs, where RSUs can have their tax deferred, although you don't want to defer it over, I believe it's 2.5 months past the year ending, or you could see large penalties. And of course, that's only the federal income amount that can be deferred on RSUs. Anyways, typically we don't like to venture down that road too much with the 409A deferred tax asset. So we'll lean on legal if the participant's adamant about deferring their tax for RSUs. But RSAs, they cannot have their taxes deferred at vesting. So how does a RSA 83B affect it? So it locks in your cost basis on the date when the early exercise occurs. You're going to have to make that 83B election 30 days after the grant date. If early exercise is allowed on those RSAs, resulting in the participant only recognizing your capital gain, is going to lock in your fair market value when you make that 83B election, and then everything thereafter will be seen as short or long-term capital gains when you dispose of those shares. But a con to this, and this could really get some of your participants pretty hot, if the grant is canceled, participants won't receive refunds for those taxes that are paid for those IRS, for those unvested shares that they forfeit. This is probably, this and the diluted EPS, in my belief, is probably why RSAs aren't nearly as common as RSUs. You really have a pretty angry participant if they've paid all this money towards taxes and then somehow lost the rights to half that award or a quarter of that award. They're not receiving any refund for those taxes they already paid. So it's kind of a risk they have up front, but it is a negative thing about filing an 83B election on the RSAs and non-quals as well. So where can you find a Form 83B? You could find the form on the IRS website. We provided a form here as well for the 83B election. It's also advised to, it's not required, but it's advised to add a cover letter. I've also heard from some participants and from other administrators that requesting on the cover letter that the IRS reply to you, although I've heard mixed stories about whether they're actually going to reply to you or not when you send that in. But I have seen that cover letter include a reply from the IRS saying that they received that. Typically, you want to send this to the IRS, of course. You want to send one copy to the company, and then you want to keep a loan file if this ever comes up when you go to filing taxes or anything like that. You have all those on record for that 83B election that you've made on your grants or your awards. I want to go into talk about transfer agents for a second. So transfer agents, who are they? They're a third-party entity that manages and transfers the holding of a company stock, their shares, where they're holding those, typically held with a transfer agent. If they're a public company, for sure, they're dealing with a transfer agent. In the 60s and the 70s, banks were doing this. Banks were holding or managing company shares. They were holding or keeping track of the shareholders, the direct shareholders, all through paper. So transfer agents came in and kind of revamped that whole system of how we're going to track all of that and mainstreamed that process. And two of the companies now that I'm sure a lot of y'all are familiar with and we work with a lot here at SOS is ComputerShare and AST. They have well over 50% of the market they provide services to. I think it's closer to 70% now with how many companies out there that require a transfer agent that they're actually providing a service to. So I'm sure that some of y'all have experience with those guys. So why are they important? They're an effective medium for communicating on the proxy vote and dividend payouts. They could track the direct shareholders within the system, the transfer agent system, or they're communicating with those indirect shareholders through the brokers for all of those shareholders that are holding their shares in street name. And that's really vital, especially here with stock plan administrators to getting plans approved. Any kind of shareholder approval that's needed, that's a really vital source, a stream of information that's going back and forth through there. And if you just think about the vast amount of shares that are being traded, that are switching hands for these large companies, and you got 25 million shares in a day that are trading, a couple thousand different shareholders' hands, it'd be really tough to track all that, especially if you're back in the old days in the 60s and 70s trying to track something like that. So that's why the indirect shareholders and the brokers are so important in tracking those and making sure those proxy votes and dividends and any other communication that needs to go to those shareholders are being received, depending on who's holding those shares at that time. And also for public companies, it's vital for companies that, or private companies that are no longer exempt to registering shares with the SEC. They'll need to use a certified transfer agent, certified through the SEC transfer agent to register those shares. Also how a company can manage and track increases to their share pools. with buybacks, evergreen plans, plan increases, or any other type of share movement to the treasury of the company or to any of its plans, ESPP plans, any kind of other equity plans that they have. Those are going to be managed at the transfer agent as well. Also with the evergreen plans, every time I see that, I like to throw out the reminder of if you do have an evergreen plan, year-end's coming, so make sure that you get those guys reported on your S8s. That's a pretty big, crucial part of those evergreen plans, and the process is just a friendly reminder to make sure you keep an eye out for those if you have an evergreen plan with the company that you're administrating for. Do private companies need transfer agents? Typically, no. Some do require, like I said, I mentioned before, if they're no longer exempt for registering their shares. Also, companies, if they're going to go public, they typically start that process of contacting a transfer agent and moving things over and the logistics of registering shares for their IPO. All that's going to be done for private companies before prepping for public. Most cap table management and share tracking for the private companies is done in equity platforms or at law firms in the early stages of those private companies. So a little bit back to the administration side and how we interact with our transfer agents on more of a day-to-day basis when those exercises occur or we have releases. I kind of wanted to break that down here and the important tools that we use to make sure those guys get settled in a timely manner. The DWAC, which is the deposit withdrawal at custodian number, and the share amount are two things that we'll use to identify the batch of shares that are going to or from the transfer agent to wherever their destination is. And another thing that will be used is the DTC number, the Depository Trust Company number, to identify where the transfer agent should be looking for shares coming in from or where to send those shares out to. I put an example here of a couple of DTC numbers from E-Trade, Morgan Stanley, and Fidelity. And then the settlement date is another important thing. I know it used to be T+3 around the middle to end of last year. It changed over to T+2, and that's trade date plus 2 market days to settle those trades at the broker that have those shares out on margin. Once those trades are settled, then they'll send the funds to the company and the tax that was withheld to the company for any of those transactions on settlement day. If there is any, in the case of RSUs, there wouldn't be any funds. There would be taxes, but no company funds sent to the company. I also provided a PDF of all of the DTC numbers that can be found, and this is a really, really helpful tool, especially if you have those directors and Section 16 officers who have their shares and their 10b5 plans with all of these different brokers. This has been a great tool. I believe they update it quarterly. It's a huge list. I don't even know or familiar with most of the companies on this list, but it is extremely accurate, and it's a really good source when you're trying to figure out, hey, where I need to send this DWAC over to this wealth manager for this director over here at Morgan Stanley. I need the DTC number really quick. So you could ask them, or you could try to find it here on this PDF that I provided, which I do believe they update on a quarterly basis. So now I'm going to hand it over to my colleague Colin, and he'll start on the insider form filings.
Thanks, Chris. First, I do want to address that we do see your questions coming in, but we're going to save those for the end during the Q&A portion. So we will go through those questions that have come in. So don't worry, we will cover those. But just to go ahead, I'm going to go ahead and jump into insider form filings and why these are important. The data reported on your your form filing, so those Form 4s or your Form 3s, that information is going to go hand in hand with your year-end proxy reporting. So the holdings, any grants issued, total shares held at the end of that year, that is going to be reported on those proxy statements, and those will accumulate on your Form 4s. And then also filing these Form 4s will help avoid punitive measures issued by the SEC. So that could be against the company or the insider themselves. So it's good to get these Form 4s done, issued before the deadline, so that way you can avoid any backlash from the SEC. There are 3 important types of forms for your insiders. The first one is going to be a Form 3, and that is for your first-time filers. The deadline for those is 10 days of becoming an affiliate of your company. So once that person becomes an insider for your company, you'll need to file that within 10 days. The second type of important form is a Form 4, and this is going to be for transactions, so those releases, exercises, the sale of long shares. You will not need to report ESPP purchases on the day that they occur. The reason for this is on your next Form 4 issued for that individual, you will just update their total holdings, and you will include a footnote that says there's an increase to these shares due to an ESPP purchase on such and such date. So you'll want to make sure to include that footnote. But these are due 2 business days from the transaction or broker notification. And all that means is if there's a 10b5-1 trade or an insider makes a transaction on a Friday and the broker doesn't deliver that information to you until Monday or Tuesday, you have 2 days from that broker report date to get that Form 4 filed with the SEC. The third type of form is a Form 5, and this is going to be for late Form 4 filings or deferred transactions. So those deferred transactions are small gifts like inheritances or actual gifts themselves, and those can be filed on a Form 4, and those late Form 4 filings can be filed on a Form 5. The deadline for these Form 5s is 45 days from the end of the company's fiscal year end. And who is subject to form filings? That is going to be your senior officers, directors, and anyone who beneficially owns 10% of the company's voting shares. If you have a first-time form filer, what do you need? You will need a CIK, which is a central index key, and you will need a CCC, which is a CIK confirmation code. How does an insider obtain a CIK and a CCC? The SEC provides everything that you could possibly need to know. If you go to the SEC website, you can find this information, but to provide this to you during this webcast, how the insider obtains the CIK is they will fill out something called a Form ID. And on this Form ID, it's about a 3-page document. There's an additional 2 pages that gives you each step on how to fill out each section of that form. They'll fill out this Form ID, they'll sign it, they'll notarize it, and then they'll send it to the SEC, so they can do that digitally or by mail. They'll send it to the SEC. Once that's confirmed, once they accept it, the insider will receive an email that will contain the central index key, and there will be information in that email on how they can go to the SEC website or EDGAR and download those CCC codes. On this next slide, I actually have an example of the Form ID, actually the first page of the Form ID. Pretty standard: name, company information, tax identifier, city. So a standard form. They will complete this, like I said. They'll send it to the SEC, signed and notarized. Takes a couple of weeks to get done, but once it's done, they'll be able to get those CCC codes, and you'll be able to actually issue that Form 3 to the SEC once they become an affiliate of your company. There's one thing that you'll want to keep in mind. If you have a board of directors that sits on multiple boards for different companies, their CCC code, they could be misplaced, it could expire, it could be lost, and if they sit on your board and another company's board, that CCC code could change for that other company. And when you go to file your Form 4 or your Form 5 for that individual, it could reject due to the fact that that CCC code has been changed. So it's always good to stay in contact with other companies that that board of directors sits on. So that way, if those codes should change, you get a notification immediately. So that way, when you go to file that next form, it doesn't reject you. And on this next slide, I actually have information on where you can go to find the Form ID for your first-time filers. If you click that link that says here, it'll take you to the SEC website. You can print out that Form ID, give it to your insider, they can fill it out, and you can get that done right away. Like I said, it's a 2-page document, and it has additional pages for instructions, and it must be signed manually and notarized. Things to think about prior to filing your forms. Transaction codes. Transaction codes are very important. The SEC, the Security Exchange Commission, has a list that you can download for your reference. We here at SOS use this list religiously. You have your standard transaction codes like an A for an acquisition, an S for a sale. So you want to make sure that you use this link on this slide once you download this information. You want to use this link so that way when you go to file those forms, you're using the correct transaction codes. Tracking insider holdings. You can do this offline. I know that some of the databases for filing your forms, you can actually do it in there. Wherever you track your insiders' holdings, it needs to be done. It needs to be kept up to date. Like I said, when it comes to proxy reporting at the end of the year, you'll need to have that information. You also need to have that information so every time you file a Form 4, you can update those holdings. Tracking insider holdings is very key to proxy reporting, to filing forms, so it's very important that you keep those up to date and keep those done. And then the last bullet point on this slide, should you be tracking indirect shares? And the answer to that question is yes, 100%. So those indirect shares are going to be your anything held in a trust. If your insider holds shares under an LLC or a corporation, whatever it may be, you're going to need to include that information on the Form 4 because that information does play into total holdings for that individual. So you want to make sure that you're keeping track of those, the transactions. So if the trust or the corporation is gifting shares, selling shares, you want to make sure you're reporting those on Form 4s and keeping those up to date. Moving right along to year-end and what to expect. As we all know, year-end is a pretty crazy time for all of us. Reconciliation, making sure your database is clean and everything is as it should be. Just how to get ahead of year-end, I would suggest, as I do for all of my clients, as my colleagues suggest to all of their clients, to start sooner rather than later. So October, November, you should be, going into database reconciliation. So making sure terminations have been input, transactions are reconciled in-house and with the transfer agent. So as Chris spoke about earlier, the transfer agents that we interact with most and even the smaller transfer agents, they allow an online portal so that way you can download any of the transactions that you've done within that year. So that way you can reconcile those transactions to your database. So doing that, making sure that all shares have been DWAC'd, they've been, transferred to the right location is going to be pertinent. Your payroll data, making sure that your HR partners have been given your transactions on a consistent basis. So those non-qual exercises, RSU releases, making sure that, the year-to-date information is correct. So that way, federal taxes, if anybody is reaching that higher supplemental rate or, Medicare, if that surtax needs to be applied, whatever it may be, you want to make sure that the payroll data has been provided and that all your year-to-date tax information is correct and accurate. And then your participant data cleanup, this goes as far as, addresses, because this will be a major key. If you're issuing ISOs or you have ESPP plans, those ESPP plans are, 423 certified plans. those 3921s and 3922s at the end of the year. You want to make sure that those addresses are correct, because when you send those out, you want to make sure that those don't get bounced back and sent back to the company, because there are deadlines that you have to meet to get that information out to your participants. So cleaning up that data ahead of time before you get to year end is going to be pertinent, so that way you're not scrambling at the end of the year to try and get everything correct and make sure everything's good to go. And then for private companies, cap table management, making sure all series of stock have been entered. So if you issue anything other than, common, Series A, Series B, whatever it may be, making sure that every series of stock that you issue is in the system and is up to date. Your transactions, making sure those are reconciled. So your option exercises, if you do issue RSUs, those RSUs are in the system. Those releases have been recorded correctly. Just making sure all the transactions have been entered and that data is correct. And then your payroll data, just as a public company would, if you do have those non-qual exercises or RSU releases, those taxable events upon vest or exercise, making sure that information has been provided to payroll so that year-to-date tax information is correct and accurate. And as I mentioned before, those 3921s and 3922s categorized collectively as 6039 reporting. That participant data cleanup is going to be important when you're ready to issue these at the beginning of next year. A couple of common questions that we get are going to be who receives the 3921. So it's any employee who exercises an ISO grant. A caveat to this is this employee must be domestic, so must be a U.S. participant. So those foreign participants that have ISOs and exercise those, you will not issue a 3921 to those individuals. And then who receives the 3922? Again, domestic employees who purchase ESPP shares. And then are there deadlines to submit or provide this information to employees and the IRS? And the answer to that question is yes, 100%. So those 6039 filing deadlines are listed on this slide, and they are as follows. There's no change to these. They're pretty concrete. January 31st, the statements must be distributed to employees. February 28th, if submitting the 3921s and 3922s by paper to the IRS, you must have them submitted by February 28th. And then March 31st is if you're submitting them electronically, this is going to be your last day. So you have until March 31st to get those done. We advise all of our clients if you're submitting electronically or by paper, to do so a week prior. So that way, to avoid, those getting to them late or, upload errors if you're doing it electronically, just avoiding any catastrophic measure that could happen, just taking the time, doing it early, submitting those, so that way, if nothing goes wrong, you're good to go. And then penalties for late filings can be substantial. And this next slide will show you those substantial penalties. If you file within 30 days of the deadline, so if you're filing March 31st electronically, so within 30 days of March 31st or past 30 days past, within that 30-day window, it's going to be $50 per failure, so per failed participant statement, and then there's a cap of $500,000. And then if you file by August 1st, it's going to be $100 per failure, up to $1.5 million. And then after August 1st or never, it's going to be $250 per failure with a cap of $3 million. And then with intentional disregard, regardless of timing, I'm not quite sure what this means, but I guess if you blatantly just blow it off and don't even try to file them, they'll put a per failure of $500 with the cap of, there is no cap. So I think with intentional disregard and regardless of timing, is basically up to the IRS. And if they impose that on you, it's going to be a hefty penalty. So we suggest that, you get those done, get those out to employees, and get those filed with the IRS. The next slide is just a Form 3921. So this is an example, something that we pulled from the IRS and wanted to include in the slide. This is a copy A, and a copy A is what the corporation keeps on file. So this is the copy that you'll keep. It's a 3921. It's simple data. Just has the name, date of the exercise, how many shares were exercised, the employee's information, a basic form, something you'll want to keep on file. The copy B is what goes out to the employee. I don't have an example of that, but the copy B is what goes out to the employee. And if you're filing electronically, the FIRE file is what you'll upload to the IRS website. And the next slide is a Form 3922, just like the 3921. It's a simple document. Has the employee's information, how many shares were purchased, the date of purchase. The copy A is for your records. The other copy you will deliver to the employee. And this is just for the record. A common question that you will get is a 3921 and a 3922 a tax document? The answer to that question is no. This is just for the employee's reference. This doesn't mean that they sold anything. This just means that, hey, they purchased the SPP shares, or if it's a 3921, hey, you exercised ISOs. So you'll want to tell them that it's okay. It's just for reference and to keep it on file. And now we will open it up for questions. Okay, I'll go ahead and address a question that we just got. If an employee, a U.S. employee relocated to Australia and while in Australia exercised an ISO that they were awarded while they were located in the U.S., should they still receive a Form 3921? This is an excellent question. And in this instance, I am going to defer this question to whoever's affiliated with your company that handles that you go to with tax advice. You're going to want to direct this question to them, as we would for any circumstance for a mobile participant, because when it comes to taxation, it can get a little tricky. Some jurisdictions will, say, hey, go ahead and just tax them in U.S. or provide them with that U.S. tax document. Or they'll say, hey, this is not going to be covered under the U.S. This is actually going to be covered under Australia. So in this is a tricky question. So I'm going to go ahead and say you should go to your tax advisor for this and pitch this question to them, because they're going to be more equipped to give you a concrete answer than I can at this time.
So I'm going to go ahead and answer another question here. For the post-exercise holding period for ISOs, does the holding period start on the date of the exercise or the date of the settlement of that exercise? Settlement could be 2 business days or many days for participants paying for costs with checks. So that's exercise date should be the day of the exercise, not settlement date. And you shouldn't allow a participant to settle if they don't timely provide that check within that settlement period, because that exercise date is held. So if a participant exercises and they're going to pay by cash, that check has to be in by 2 business days, because you're still using that F&V on the day that that participant submitted that they would like to purchase those shares and exercise those shares through cash. So you're still going to use that exercise date that they submitted. If they take longer than 2 days, then they would need to re-enter the exercise to recapture that FMV, and then they have another 2 days to receive or to get that check in, which administratively it is something that is pretty hard to do, especially if you have employees globally or across the country, which is why a lot of companies allow wire transfer as well to meet that 2-day settlement requirement to settle that exercise. And then I had another question here. There was a couple of questions about the ISO spread calculation, and then there was another one with no withholding requirements on a disposition, correct? That's correct. There's no withholding requirements by the company on a disqualified disposition or qualified disposition, or ISO in general. The company doesn't have any withholding obligations, although the company is required to report on the W-2 of the participant if for the year that the disposition occurred for that compensation amount. And so it's a little bit tricky with ISOs. It's not as straightforward as non-quals. If you sell an ISO at profit, then your compensation income will be the spread between the FMV when you exercise on that date and the strike price. That'll be your compensation amount. So that'll be the amount that's reported on the W-2. Kind of think of it as your cost basis there for that FMV on exercise date. Any profit above that is going to be capital gains, and you're not going to report that because that'll be for the participant to see as capital gains, long-term or short-term capital gains, depending on how long they held those shares. If the shares are sold at a loss, then that entire amount won't be reported as compensation income. If they sold those shares at a loss, it would be a capital loss in that point.
There's another question here. Is there a tax advantage of holding shares for 1 day? No, it would not be advantageous to hold for just 1 day. It's still going to be disqualified. So whether it's ESPP, option shares, you're going to want to, if you want the tax advantages you want that qualified tax advantage, you're going to want to hold for that designated period. And then you can go ahead and sell those shares, but just holding for 1 day is not going to be advantageous.
And then we have another question. When should we report disqualifying disposition on payroll if the company itself repurchases the shares as part of a tender offer, for example, during the middle of the year? So you're going to report that income on the W-2 for the year that the disposition occurs. So if those are ISO shares that are being tendered, that's a disposition that occurs. So if that happens before the 2 years from grant and the 1 year from exercise date occurs, then that disqualifying disposition will be reported on the participant's W-2 as income. But there wouldn't be any withholding obligation for the company, just reporting that and taking that amount as a tax deduction for the company.
Okay, we're going to go ahead and pass it back to Shauna. If we did not get to your question now, please hold tight. We will get to those questions within the next couple of days. So again, we apologize if we didn't get to your question today, but we will have an answer for you within the next couple of days. So I'm going to pass it back to Shauna. I want to thank everyone for showing up and listening. Shauna, if you want to go ahead and take it away and close it out.
Great. Thank you so much. I'd like to thank you and Chris who joined us today, and thank all of you for attending today's educational webcast. Again, please do look for an email in the next few days with links to the recording and materials for this session. Thanks so much and have a wonderful day. Bye-bye.